Did you know you don't have to wait for market conditions to improve or change in order for you to get the best interest rate possible when purchasing a home in today's market? I'm Sean Casilli, team leader for the Bay Real Experts Group, Coldwell Banker Realty. And today I'm going to talk about a few different little things that you can do, little changes in your personal finances that will help you qualify to get the best interest rate possible when purchasing a home. So around January 2022, interest rates were still sub 4%. And then within that year, by the end of the year, they had almost doubled. They were up to 7%. And today, now, just in the beginning of 2024, interest rates are still hovering around that 7% mark. They are coming down a little bit. It's now February 2024, and we are seeing interest rates starting to come down. But if you're trying to get the best possible rate, let's talk about those little things that you can do to your own personal financial profile to make sure that you get that best rate possible. The first one is to read your credit report and improve the accuracy so that it improves your score. So maybe there's some things on there that shouldn't be there. Maybe some things that should have dropped off. You can always pull a credit report and make sure that if there are issues that are easy to take care of, you get those wiped out. And because the higher the credit score, the lower your interest rate will be that is offered to you. It makes a big impact on the rate that you can be offered. Low scores, higher rates. High credit score, lower interest rate. The other thing you can do is take control of your debt to income ratio. This means, whether you got personal credit cards or other loans that are out there that are pushing your debt to income ratio up, a lender's not going to want to see your payment shouldn't be more than 28% of your income. So if you have a high debt to income ratio, it's going to be a more risky profile, more risky file. Interest rate is going to be higher if they even give you the loan. So the lower your debt to income ratio, the better you guys are going to be in shape to be offered that best rate possible. One other thing that a lot of people overlook is a strong employment history record. Whether you're self-employed or you are W-2'd, the longer you've been in that same form of employment, or if you're W-2, you've been at the same company for several years, you might only get requested to show your last 2 years of W-2s and your tax returns if you've been at the same job for several years. Again, the lower the risk on the file, the better the interest rate that can be offered to you. And one other small thing that you can do is shop around for a better rate. Now, going from lender to lender, you may not get too big of a variance on the rate, but it is worth checking around with a few different options. Yes, in closing, mortgage rates do remain high when you compare it to what they were, say, 5 years ago, but they are on a downward trend for now. But take these key points and make some of these changes, and you will be assured to get the best possible interest rate offered to you when you're shopping for your house. And, if you guys are interested in working with our team, we cover from Pensacola to St. George Island. If you're looking for a home, we would love to help you in the buying process. And for those of you interested in a career in real estate, we're expanding our team as well. All of our contact information down below and the forms to get in touch with us for either of those scenarios will be down in the description below. And if you found this content valuable in any way, shape, or form, you guys, please do that whole YouTube algorithm thing, hit the thumbs up button, subscribe so you don't miss out on the next update. And I think that wraps this one up. We'll see you guys on the next one. Bye for now.